That would be an exaggeration. But anyway, they invited me back into the deal because they were having trouble refinancing it. The mortgage is held by the people in that big building over there called Fairwinds, the Fairwinds Credit Union. What do you think of when you think of credit unions? Are they easier to deal with than banks? Not this one. Ooh, they're tough, man. They want a point just to refinance it. That's just going in. That's just. I thought, to refinance? No, I'll pay you a fee. What do you want? A couple $1,000? No, they want a 1-point fee, and it's got a $3.5 million mortgage, so it's $35,000. And they're not even guaranteeing they're going to close. I love this country. Isn't that cool? Now, that's because my former partners over there have got to run this deal into the ground. They got an empty floor, and their debt coverage ratio is zippity-doo-dah. And these guys don't really want the loan anymore. They've had the loan for 3 years, and my guys want them to renew, and they're saying they paid them like a clock. They paid them every instant, but because of the way times are now, you got to write this down. You got to write everything I say. Write this down. You need to write down on the left-hand side. It has nothing to do with the course necessarily, but it's not the facts that are important. It's your attitude toward the facts. Not the facts that are important, it's your attitude toward the facts. And their attitude, most lenders' attitude, by the way, is that we're in hard times and loans are risky and we're trying to lay out as little money as possible. Later today, Stu is going to talk to you about the real estate cycle. It's going to be a circle, and it goes around in a circle every 5, 6, 7, 8, 9 years, depending. It sort of follows the business cycle, but not altogether. But you can also think of a cycle like that, right? That's one cycle. And this would be the top of the cycle, and this would be the bottom of the cycle. What would be, if you had your druthers, the best time of all to buy? At the bottom, because prices are cheap, right? You know that most property isn't bought at the bottom? Certainly not a lot of commercial property is bought at the bottom. This is the bottom right now. We're very close to the bottom in the real estate cycle. Most property isn't bought at the bottom. You know why? No, people are not afraid. There's a lot of people that are not afraid. I wish I could have bought more property at the bottom. You know why I didn't over the years? I couldn't borrow any money. Here's the real estate cycle for banks. Let's see if I can do this right. You would buy here, right? When should they finance? Right here. This is the least risky time for them to loan money. Wouldn't you agree? Why? Because prices are below value right now. Prices for commercial real estate, for homes, for everything, are below value. Way below value. So this should be, if you could make the cash flow work. Now these guys have the cash flow working. They're paying the Fairwinds like a clock. For 36 months in a row, they've never even been one day late on their payment, right? And Fairwinds are treating them like they're homeless people. I mean, I went and got this form filled out for the commitment letter, and I got all the stockholders to sign, and I'm one day late showing up. And the guy treats me like I've stolen some money from his credit union. He says, I expected you here yesterday. I said, I didn't expect it would be this much trouble. I thought I would just fax it over to you. Unbelievable. They don't want to lend money here. They want somehow, they lend maybe 50% of their money in this zone. Of all the money they're going to lend in a real estate cycle, they lend about 50%. They're just shoveling it out the door when it's the most risky time of all to be lending money. And they don't lend anything just about down here. It's hard enough to get a loan renewed down there. They start feeling a little better in here. and then they feel really good as it gets higher, and then they just throw money out the door. You remember the big, some of you are old enough to remember the big S&L crisis of the 80s, and the reason part of there was a little bank down, a little community bank down in I'm talking about in the Tampa area, little tiny bank in the Tampa area that had loan offices throughout the West Coast, throughout the West, Arizona, California.